CRT and Total Soup secrets, candle anatomy, which is so-called open, high, low, close, open, low, high, close. Now, this is one of the utmost important concept in trading, as you obviously know, because every candle has a open, high, a low, and a close. Every candle has an opening time and a closing time, and every candle is the same. Now, the only difference between the candles is the time they print. A weekly time frame candle takes longer to print than a 1 minute candle. A 1 minute candle prints it exactly the same way, right? It just prints way faster. Now, you get to see sometimes that what happens in lower time frame is what exactly happens at the higher time frame, but at a slower pace. Now, I suggest you guys use a lower time frame a lot, and a fuck ton of, right? You should use a lower time frame a lot, which I will talk about in this video, because it's a fractal nature of price. If the 1 minute before hits a target ranges, what makes you think it will do in a higher time frame? It will do the exact same thing, right? It will in the higher time frame before it hits the target, it will range again, but it will range a little longer, right? It will take because of time. The candle is a higher time frame, so it will take a little longer to print, range, eventually market takes out the target. Now I'll show you guys an example in the chart. I will show you guys some graphical example also on the candle. Now, make sure you guys like, comment, subscribe, share. Make sure you guys join the Telegram, and make sure you guys hit that notification. And let's get straight into it. Now, candle anatomy, or you could call it open, high, low, close, or open, high, low, close, is, it's very simple and it's very important. Now, the time aspect of the open, high, low, close, or candle anatomy is very simple, which is time open and closing time, right? And keep in mind, they don't go reversing, right? They don't go reverse. So open and close are fixed. So that means they will close the same way all the time. The opening time will always be the same time. The closing time will always be the same time, right? What I mean by same time is it will not change, right? It will not change how the price changes, right? But the price aspect could be sometimes like straight dump, right? Without doing much. Dump instantly. Sometimes you can see a candle open, right? Without making a high, just dump, right? Right? That's a price aspect, right? Sometimes it could go range, boom, 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 go down lower, right? And close, right? The price aspect could do multiple things, but the time aspect is always going to be fixed. Fixed opening time and fixed closing time. Now, the open, high, low, close concept is the concept I use to always determine my bias, to always determine where do I think the market will go. Now, I'll show you the example on the chart also, but a quick representational graphic, some drawing, I'll show you guys how the market will move. It's very simple. Like every candle will always open, right? Range a little bit, eventually go back to high, tap some sort of a key level, eventually still range around there, super another range high. Go. So as you guys know, higher time frame range. All right, let's say there's a higher time frame range. Let's say the weekly range, right? The weekly CT high gets purged. Now, this is lower time frame range on the higher time frame range high. Lower time frame risks, higher time frame reward. Now, let's say weekly CRT high, right? Weekly CRT range. The CRT weekly CRT high gets tap some sort of a key level. And the daily time frame when you tap the key level, he ranges. Now, once he does that, when he ranges, the daily range high is swept again. Now, on the lower time frame, same thing happens again. He ranges a little bit more, right? On a 4 hour or 1 hour, presses the range high, and eventually reverses from there on forward. Now, it won't go on to the, it can go on to from the 4 hour to 1 hour to 15 minute, but it won't always be like that, because sometimes it could be 4 hours to 15 minutes. right? But we know that from the daily to the 4 hour / hourly are the highest probability way of trading, range to range to range, a bigger range to a smaller range to even smaller range. And now we reach a smaller range stop loss like down here, and we target the bigger range, right? And beyond it. Now, this is not an actual good example, but that's how the market goes. Now, market draws, boom, goes down here, makes some sort of a low, boom, 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 and closes, right? Now, going to like, this is a CRT low. I mean, it's supposed to close around here. Now, what I showed you around here is once I went down to this price point, now this is an even lower time frame price action. Now, this is even more lower time frame price action. Eventually, you enter some sort of around here. You put your stop loss very tight. You don't put your stop loss around here. You put your stop loss on the 5-minute stop loss, on the 15-minute stop loss, and you target the weekly. Now, that's how the candle always goes. You're always going to open, right? It gets to the soup, right? Boom, boom, boom. OTE, boom. Eventually, one last leg down. Eventually, close range, boom, right? That's how the market usually always goes. Now, this is not a clear, isn't a clear drawing, but I'll show you guys what I mean. I will show you, this is the pattern you always want to look for in open, high, low, close is open, right? Eventually, when we're making the high, we tap some sort of key level, right? And the key level could vary, as I said in my how to plant the correct key level video, which you should go watch if you haven't yet, because you understand this much better. Now, once you tap the key level, what you're gonna do is look for even a lower time frame. Once you tap the key level, once you tap the high time frame key level, you're looking for a lower time frame range, right? Now you're looking for the lower time frame range to be formed, and looking for the lower time frame range to get souped. Boom. Eventually, you could possibly go to even lower time frame. Let's say weekly, once again, daily, once again, and eventually 4 hour, boom, boom, right? Eventually reverse it from there on forward. 4 hour time frame range a little bit, right? And eventually from there on forward, you will go to 15-minute time frame, execute the 4 hour CRT range, and eventually what you're gonna do is put your stop loss at the 15-minute time frame, enter there. Market will usually down. That's too deep of an OTE, right? Market will do some sort of OTE, retest this specific range, right? This range could get retested. Boom, 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 right? That's just what all the time happens, the actual practice. Now, there's multiple ways of OT. There's multiple ways of candle anatomy, and this is the one I just showed you guys, like how the market constantly scales down. That is the classical, which usually always happens. Now, during the duration of that, if I go back here, right, when it goes down to make the low, right, when it goes down to hit some sort of a target, let's say around here, let's say that target is down here, right? Before it does that, what you'll do is range, right? You will fuck up, right? Eventually, sometimes you will range, target, and eventually people think, oh yeah, that's a low. SMT or tabulation block, they think it's a low, right? And eventually, like, okay, that's a reversal, and eventually fails. It goes down lower, hits the target. That's what usually happens, right? Now, what other times it does is just it ranges, it shows some both sides. You'll be like, okay, cool. Now that low definitely placed in, I'm gonna long it up. As soon as I'm gonna get taken out, either SMT or tabulation block, whatever. And people see a huge reaction out of it. People think like, oh yeah, I'm gonna buy low and I'll sell high. But all they get is a OTE that eventually crash down. Boom. Right? Now there's our target. Eventually market will go down lower. Boom, boom, boom. Close. Right? Where the market is supposed to close at. Now opening time is perfect. The closing time is perfect. Anything in between is just price based. Now keep in mind, let's say it's a weekly range high, right? Let's do this weekly range high, right? Now down here, looking to use the same concept, but in the lower time frame. Now down here, you're looking to use the same concept, but in the lower time frame, right? So you scale down, fractal nature of price, right? As I said, every candle is the same exact fucking thing. Every candle is gonna open, make the high and close, right? Make the low and close, open, right? Open, go to soup, right? Or key level, eventually range, some sort of range, boom, scale down, boom, 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 close, right? That's not a perfect example. That's why, as you guys know, my drawing is kind of shit. That's what I'm going to show you guys in the actual chart. Now going back, this is the wrong target here. Let me put the right target on this one. I was analyzing that chart and my target on that was wrong because we're not in an expansion. We're not in an expansion. We're not in an expansion month, right? We're not in a classical expansion month. So targeting beyond the CRT is not a good thing to do. Although it won't probably go up here, but it's regardless for the longer term basis is not good. Not a cook little sauce, right? I made a video on this. Now I was just analyzing the chart. Okay, what could have I done better, etc., etc. Now, what I wanted to show you guys is that nature of price. Now, if you go to the weekly time frame, as I said, the weekly, right? So now let's say this is a weekly CRT high, weekly CRT low, right? Weekly range, right? We project the weekly range high. Now, once you project the weekly range high, we're looking for a lower time frame range once the market purges the weekly range high, so a daily level, right? Project the weekly range high. Now, once you project the weekly range high, show you guys. Now, if I want to like, well, it's supposed to be here, but you enter down here. I mean, I didn't even enter the trade because of missed trade recap, right? But you enter down here. Let's say we enter the trade. We enter down here. I mean, market high already got purged. Keep in mind, we're still relatively reflecting out of it until the target lows gets met. So it's still relatively, you know, it is still relatively, that's what I say. It's still relatively at the key level, right? That's how the market moves. That's what I found out, right? Now, let's primarily say we're focused on this. Eventually, we can go on to this, right? I'm showing you guys lots of examples. Now, we opened on the higher time frame, right? Open, right? In this case, this is the opening price, right? Opening and closing price, right over here. During that Pacific week. So opening, low, closing price is always fixed. But the price spec can be a little different, right? Open, high, low, and close, right? So it's much, oh, right here. Yeah, open, and eventually the close is down here, right? So the closing aspect is much different than the time, right? The time is always fixed, but the way the candle prints, you know, in the lower time, at the way the candle prints can vary. So there's gonna be types of candles where it's gonna be different than this, but at the end of the day, it's gonna be open, high, low, close, open, low, high, close. It's always gonna be like that, but the way it's gonna print is gonna be a little bit different, which that is what you need to study. The best way to study it is gonna be the lower time frame, because every candle is the same exact candle, right? Now you can eventually, once you see the lower time frame happen a lot, you'll be like, okay, this is what actually happens in higher time frame also. So these are types you can print. Now, when it prints like this, I could use it as an advantage. Now, as you guys obviously know, hammer candle, right? The reason this candle closed like this was very simple, right? A mid-week reversal. And as you guys know, if you study the lower time frame, you would know how the candle would need to close. So this candle can't close in a classical expansion, it needs to close in a hammer candle, right? And eventually the next candle, OTE sometimes, or just expands to the target, right? Now, the only way you can know that is by what? By what? Look at the lower time frame, look at the price action, or you can look at the higher time frame. I barely look at the lower time frame at the start to just gain experience. But my proficient was looking at the daily and the weekly, because that's the time frame I'm taking most of my trades out of. So if I know how that candle prints, although you can be like, oh yeah, just go to the lower time frame. But those right there, the way I personally determine how a candle would close based on open, high, low, close. Because you guys know, all I fucking do is trade time-based open, high, low, close, and CRT, right? So that's how I trade, right? Simple as that. Now, when I'm trading CRT here, right? One thing I have to say was using weekly profiles, right? I use weekly profile to determine, okay, in a mid reversal, the weekly candle is going to be some sort of a hammer candle. And a classical expansion profile is going to be some sort of classical candle on the weekly, right? Because my main priority is to determine how a weekly candle would close. And I use weekly profiles to determine how it would close, right? A consolidation reversal will make a consolidation candle on the weekly time frame. It's simple, but people don't pay attention to it, right? But you know, it is what it is, right? Now, same thing on the lower time frame, right? 4 hour, daily, etc., etc. Now, but we're not there for that yet. So we're not here for that, right? So over here, we have a weekly CRT. So as I said in the start of the thing, weekly CRT, weekly CRT gets first, right? Now we're looking for a lower time frame at the higher time frame range. Boom. Eventually, at the higher time frame range, we obviously know we don't want to enter here. We want to look for even lower time frame range than that. Now we're on to lower time frame. Okay, in the lower time frame, we have an even smaller range right here, right? We made an even smaller range. Our range is, if you pay attention to it, it's gonna be this, right? Now we have an even smaller range. All our range, actually keep in mind, our range is this CRT. They're probably like, oh, well, you put out the low, you put out the high. This target is already get mad. I mean, the range is no longer a range here. It's still relatively a range because we were bearish, right? If we were bearish in a lower time frame, sometimes you find a candle be like this, and our range would not be this candle, but relatively be this candle, right? Why? If you look at the lower time frame a lot, you will see a candle print like this, and this will be our actual range. Because how is our actual range? Because the range never got broken through, right? It never got broken through, but eventually got broken through in our direction, right? So we have a lower time frame range and the higher time frame range. Well, like, the higher time frame didn't get met, but when it does get met, we already have a range there in a lower time frame and at the higher time frame, and even a higher time frame than it, right? So we scale down to even lower time frame. Now looking for execution, right? Simple as that. Now all we have here is over here. We have what? And fake double top, right? Total soup it, boom. But when we fake double top, total soup this, we also need to tap this because some sort of a new trap type of trade. So we need to also tap this in order for us to validate any setup. Now once we have that, we can go down to the lower time frame just to execute the setup here. Let's see if the candle could actually print in the minute time frame here. Please print. Right here, you print it. Now in lower time frame, then it look for the same thing again, range to the soup expansion, right? And in this case, the lower time frame, this is a low that pushed out the high, went up even higher, came back down, and eventually we did some sort of arranging type of candles here, right? So we arranged a little bit. So what we're looking for is our setup here, right? We're looking for whatever you're looking for, model one, auto block, fair value gap, etc., etc. In this case, your auto block would be the specific candle, or you could have traded this resistance block, right? You could have traded this fair value gap, whatever, but you're looking for the same thing, right? Look, we had a weekly range. Once the weekly CRT high got purged, we had a daily range. Eventually inside daily range, we also had a 4-hour range. Now, they all got purged. They both got purged at the same time. So okay, cool. Now looking for execution. Now we can't enter in a 15-minute time frame because there's gonna be no setups there. There's gonna be no type of setup. Although we have a fake double top, but the fake double top requires us to have a 1-minute entry. The 1-minute entry, all it requires us to have is a breaker entry, right? A breaker entry. So super fake double top high and tap the higher time key level also. Tip it out. There's a low that broke the high. Boom. Eventually looking for a closure below. Once we see a closure below this low, eventually we're looking for some sort of setups, right? Now also there's various, right? Sometimes it could be like a breaker entry, right? Or it could sometimes be tap the high to key level, range, look for some sort of total soup, and eventually short it down, right? So at the high to key level, right? Eventually from here on forward, we started ranging a little bit. Now looking for some sort of total soup. Your total soup could have been this fair value gap or this resistance block, right? I think it tapped it. It takes that, I'm pretty sure. Usually when it taps the high to key level, right, you will range. Eventually, if he's not gonna take out this high, he's gonna tap some sort of others. He's gonna soup the closest liquidity near the market price and eventually rally down from there on forward. In this case, it was the resistance block, right? He got tapped. I'm not sure. I think he tapped at the same price, but I'm not sure if he took it out or not. Yeah, relatively same price point. But, and you guys know, when he taps it like that, it's still valid, right? Because it's a 1-minute fucking time frame, right? But people are not looking for the 1-minute fucking, 1-minute fill, right? It's bullshit. The market maker doesn't go around 1 minute. But what we do is we use the 1 minute as a confirmation tool, right, to enter our trades, right? So tap the key level, range, right? Eventually, let's do the super the closest super the closest high or whatever that can take out liquidity or fill liquidity that eventually scale down from there to the downside, right? Boom. We know this high is protected because sometimes you will not press it out, sometimes it will, depending on where the market is at, right? If you protect this high, cool, just enter still here. But right, usually will not soup it out if it shows you something like this. But sometimes it could show you like, press out the high and you range around here. And eventually it will be near this high will be near the price. You just press out the high, then go down lower. But usually 90% of the time, you will not press out this high. You already make the high, and eventually soup out some side of high, and eventually scale down from there on forward. Or you could enter the safe route, which is the breaker, right? The breaker in this case, I'm not sure if he got tapped or not. I'm not sure if he got filled again. This is a little broke the high. We almost had a closure below, but market rejected out of it. We never closed below the wick. We closed below the wick, but that candle never got retested, which would have made you miss the setup. But as you guys know, that could also happen, or this could happen, right? You just soup the closest to the soup needed market price and just use that let's just use that to get in the market, which is the best way to get in because that will highly likely not make you miss the setup. Also, it's more rewarding, and the people may call it risk, very high risk with high reward. It's fucking false because that's how all the market time. That's how the market moves all the fucking time, right? Now let's check as an example, right? We're relatively still in the same range, right? Same weekly CRT range. Now on a daily time frame, obviously I guess spreads you're looking for a different range, right? We're looking for a daily time frame range. Now we have a daily time frame range. Now a daily time frame range, we just can't enter the daily time frame range because the stop is gonna be too wide. So scale out to a lower time frame, 4 hour. Now this range is still relatively expected. So on the 4 hour time frame, we know that okay, market may not retrace all the way back up. So it says a new situation. This is where we're looking for daily profiles. Looking for since we look at new situation, there's no pattern of a new there's no pattern of a New York OTE. It's a rally. All we're gonna anticipate is go down to a lower time frame and look for the open high low close. Now we have our bigger range. We have a biggest range, and eventually we have a smaller range, and eventually looking for an even smaller range than the small range, which is the hourly time frame, right? So all we're looking for is open, high, low, close, right? So we open on this daily time frame, open, high, eventually we're gonna make some sort of low, close, open, high, low, and close, etc. That's all we're looking for, right? Now I'll tell you guys why we're looking for open, high, low, close, right? In this case, our CRT is the specific hourly CRT, right? The 7 a.m. is our CRT. The 8 a.m. projected settlement is the high. So open, high, low, and close, right? That's all we're looking for, right? Now I'm in lower time frame, then it look for execution. So at the range high, we have about high. Cool. We have our entry model. Provide gap below an old, provide gap over old high. Throw a bit and eventually shut it down. You could put your stop loss. Your stop loss could have varied, but this is the safest stop loss. Since you're entering the 5 minute time frame, this stop loss is very good, right? Because you could put a you could have put a 5 pip stop loss, but you could tighten it up once you gain more experience, right? Which will take fucking a long time, but that's what we're here for, right? We're here for a long time, so that should be no worries. Now we're looking for the same thing. Well, as I said, open on the 8 a.m. candle, right? It's fixed, always fixed. Open to 9 a.m. candles right over here, right? It's always fixed. The time aspect is always fixed, but the price aspect could vary. So market open, high, now low and close, right? And eventually you see the 9 a.m. came around. Eventually 9 a.m. did the same thing. In this case, the 9 a.m. just rallied, right? It didn't do much, right? Rallied down. Eventually, in this case, he rallied down first, made the high, it went back up, made the high, eventually went back down, made the low again. And the price aspect could vary, but the time is always going to be fixed. Now, the same thing. Now, as I said, one thing I pointed out when I showed you guys the graphic was that before the target is met, it will usually range. People think, oh yeah, there's SMT there because there was SMT. People think that's, oh yeah, it's a resistance block, so that's gonna go up higher. So they long it up. think they're buying low, all they get is a OTE, a deeper OTE, eventually gets stopped out when the news comes around. That's how the market moves. Now, that's always happens. Right? That's the one thing that always happens. Now, when it does range, all you're looking for is some sort of a total soup, right? OTE total soup, like OTE, right? Eventually looking for some sort of a total soup around the OTE, soup it out, then write it down to the downside, and you'll hit your target, right? So we could have done the same thing here. We have the higher time frame range. Now eventually we have the lower time frame range, right? How we have the biggest higher time frame is weekly range, we showed you in a higher time frame. We have a daily range now. Outside daily range, we have a 4-hour range. Now using the 4-hour range to target the daily range and the weekly range, but primarily the weekly. As you guys know, we are short-term traders. Our targets varies primarily for me on the weekly time frame. Now sometimes maybe monthly time frame, but that's only an expansion candles on the monthly time frame. A Pacific monthly expansion candle, which would be on the distribution after AMD, right? During the AMD, so accumulation, mutilation, and expansion, we could target beyond the weekly range and target the monthly range targets, right? So yeah, this is a candle anatomy. Thanks for watching. Make sure you guys like, comment, share, join the Telegram, link in the description down below, and I will see you guys inside the Telegram. Bye.